Good afternoon, everybody. Welcome to today's deep dive into the Southwest Investment Fund. This is today we're covering Area 2, which covers Bristol, Gloucester, Wiltshire, and North Somerset. We've got some great guests along today to kind of have a conversation around all things to do with the Southwest Investment Fund. My name's Aaron. I'm a partner at Francis Clark in the Business Advisory Department. I'm also a Dorset LEP board member and a representative of the Southwest Investment Fund Advisory Group. To kick things off, Dave, would you mind please giving an overview of the Southwest Investment Fund and a little bit about your role within the British Business Bank?
Yeah, sure, Aaron. Thanks for that. So firstly, by way of introduction, I'm David Tindall. I work for the British Business Bank, and I'm part of the Nations and Investments Funds team, and the team that's responsible for delivering the Southwest Investment Fund. I'm also joined today on the call by Lizzie, who is here, and she'll help any difficult questions that sort of pop up or anything that sort of add to sort of throughout the call. So it's great to be invited along today, and we've seen a lot of interest in the fund recently. So we thought it'd be really useful to sort of just come along and just sort of try and frame and answer any questions in terms of what the fund can actually deliver to SMEs across the Southwest. So I've got a few slides that I'm going to just talk to now. So on the first slide, I'm just going to cover in terms of who the British Business Bank are. So we are the UK's economic development bank, and our aim is to be the invisible hand to help make finance markets work better for SMEs across the UK. Both Lizzie and myself were part of the Venture Solutions team, and the Venture Solutions team has a number of programs that deliver growth finance to SMEs in various different guises. One of those programs, or sort of some of those programs, are the regional funds programs. So we have got some existing regional funds in the way of MPIF, MEIF, and CISF. So that's Northern Powerhouse Fund, Midlands Engine Fund, and the Cornwall Alder-Silly Investment Fund that have targeted regional financing across different areas of the UK. We've now recently been awarded a mandate to deliver 1.61 billion of funding across different parts of the UK, and these are the next generation of the regional funds, of which SWIF is one of them. So just focusing in on that sort of that 1.6 billion pounds, this is how it's been cut up across the UK. So you can see from this map, we've now got funds that cover the majority of the UK. We ran a competitive process for appointing fund managers, and the 200 million pound SWIF area that's shown in the sort of the bottom left-hand side of that map sort of represents the area that these funds cover. So SWIF is made up of 6 funds, and it was the first of this generation of regional funds to launch across the UK. And since launch, we've subsequently launched funds are now live in all of the devolved region and just sort of devolved administrations, and MEIF2 and MPIF2 will be going live sort of later this month. So focusing in a bit further in terms of SWIF, so there's 3 types of funding that are available. So there's smaller loans that are available for businesses that are between 25,000 up to 100,000. There's larger loans between 100,000 up to £2 million, and then there's also equity finance that is available for investments up to £5 million. These funds have got a 5-year investment period, so the funds will be sort of very active in the market for the next 5 years, sort of helping to support businesses and drive that growth across the Southwest. And then there'll be a period afterwards where they've got the ability to continue into investments that they've already got. The funds are sector agnostic, so they will sort of consider applications and inquiries from businesses across the Southwest that have sort of in any sector that they are operating in. The aim of the funds is to ultimately to try and drive economic growth and help support those businesses within the area to grow. You'll note from the map we've split the Southwest because it is a large patch into 2 different geographic areas, and there's different set of fund managers delivering sort of the north of the region compared to the south of the region. So I'll quickly just cover the south of the region. So there we've got SWIF Finance delivering smaller loans. The FSE group have then got the mandate to deliver both the debt and the equity funds. They remain two separate funds. And then focusing in on today and sort of the audience, the sort of fund manager that you'll hear from shortly. You've got FW Capital delivering the large debt, and Maven are delivering the equity investments in the north of the region. So hopefully that's given you a bit of an understanding of the fund, and I'll just pass back to Aaron now. So thank you for that.
Thanks, Dave. So we've also got David Goodall and Luke Matthews from FW Capital and Maven, respectively. David, would you mind going first and just sort of giving an overview about your role and kind of what it is that you do?
Yeah, sure, absolutely. And thanks for the invitation on the call. Great to be here this afternoon. My name's David Goodall. I'm a fund manager with FW Capital, which is the funding arm of the Development Bank of Wales. I'm responsible for the debt fund of £19 million under the South West Investment Fund. And we lend between £100,000 and £2 million by way of competitively priced fixed rate loans, typically between 12 months and 5 years duration. In terms of geography, as been mentioned, we're working with SMEs across Bath and North and North East Somerset, Bristol, Gloucestershire, and the whole of Wiltshire. And it's a geography that I've lived in and worked in my whole life. So it's a real privilege to be working with businesses across this area. Since the launch of the fund here at FW Capital, we've received around 100 inquiries. And they're coming directly sort of through direct approaches, through contacts that we have via the websites by FW Capital and also the British Business Bank websites. They're coming across the whole of the region, and actually the diversity of businesses that we're talking to is absolutely immense. From artificial intelligence, quantum physics to, your manufacturing. So the whole range, which really does show the diversity of business across the Southwest economy. We're taking a very, very personal approach to the inquiries we receive. We do some initial research first, really using the public sources of information that are available to us. And then typically we set up a Teams call with the business to go through the fund in a little bit more detail, find out more about the business, and then we can tend to work out whether it's one for the fund or not. If it is, then we'll ask for more financial information, and typically that will then lead to a face-to-face meeting. And if it's not one for us, then we'll still see if we can help in some way. And that may be a referral into Southwest Investment Group, for example, or indeed Maven, because we do work very collaboratively, and there's been a lot of lead sharing, if you like. So where it may not be one for me, I might pick up the phone to Luke and have a conversation with the client's blessing. What we try and do is find the right home for the funding requirement of that particular business. And I think that personal approach is working exceptionally well, actually. And I think that will lead to some transactions being done where they may have been referred into us, but actually the transaction may be done elsewhere. One of the keys for us is to be as approachable as we possibly can be and to make the funding as personable and straightforward as possible. We are able to move things through very quickly. We have named points of contact within the organisation. So I've used the word slick quite a lot, I guess, in terms of our process. Because we are a relatively small organisation, we do everything in-house. And actually, I think that makes for a really smooth transaction, which is really good to see. In terms of the dynamics of the businesses that we can typically take forward to the funding stage, for the debt finance piece, they do tend to be a little bit more established and have a track record of being profitable and able to service the debt that's provided. The last thing we want to do is burden a business with debt where it may be a stretch for them to make the repayments. What we want is the business to be concentrating on the growth opportunities that it has, rather than worrying about making its repayments to us as the funder. We are a very commercial debt fund. We're not subsidised government debt at one end of the scale, and we're not venture debt at the other. We're a very, very commercial debt fund. And I guess one of the key gaps that we fill is where traditional lenders, when they're looking at growth funding, in a lot of cases, they may be looking for some form of tangible security to actually secure that debt. We at FW Capital don't need that. So we do a very robust element of due diligence ourselves on the business to make sure that we're happy with the risk that we're taking, because we don't rely on freehold tangible security for our debt. So we just want to make sure we're lending sensibly and commercially. So as a result, we are actually seeing referrals through from high street banks where the relationship team would love to provide the debt, but actually due to the lack of a tangible asset, they can't. So that's where we can potentially help. And indeed, the first transaction that we've taken forward is exactly that. It's a fast growing, profitable business in the centre of Bristol, great management team, great growth opportunity. The incumbent bank was unable to support due to that lack of security. They called us and we were able to move very quickly to put that funding in place. So we did £500,000 to that business, 5-year term loan, fixed rate of 7.75%, and worked very, very, very swiftly to make sure that happened successfully. The pipeline that we have, it has some great businesses across a whole diversity of sectors, which is fantastic, but we are looking to support more. So what I would ask is that if you've got a growth requirement, you're looking just to have an informal conversation, please just pick up the phone. Very happy to have an informal conversation, whatever stage you're at, because we can usually find a home for the business in terms of its funding requirements, and very happy to have those discussions. So I hope that gives you a good overview of what we're doing at FW Capital, and I'll hand back over to Aaron.
That's great. Thank you very much. Over to Luke.
Yeah, thanks, Aaron, and good afternoon, everyone. As David said, delighted to be here. I'm Luke Matthews. I'm a partner at Maven Capital Partners. For those who haven't come across us before, we are a national fund manager, very much focused on SMEs, particularly the growth end of S in SME. We manage a range of funds, predominantly our VCTs and regional funds. And of course, per this call, as of last year, delighted to be managing our element of SWIF in the region. I'd very much echo the sort of the theme of what David said there. We very much encourage people to come and talk to us. I think people often assume there may be conditions or criteria that apply, and we'll come on to some of those, but nothing helps like an early conversation. So people sometimes have fears around needing co-investment. Are they too small? Are they too big? When is equity appropriate? All that sort of thing. And we'll be talking about a lot of that on this call, but I would say, come and have a conversation and just try and dispel that fear. I think people sometimes get intimidated, they come too soon or they're not ready with the information, and that will somehow be held against them. That's absolutely not the case. We are as David has said, we're a commercial fund looking for an appropriate return. We'll be assessing the risk and the potential rewards of any given investment, but we're very flexible. Other than some fairly obvious criteria around the regional aspect, around certain excluded sectors and things, there's a lot that we can do. Indeed, we actively want to be investing across a range of sectors and right across the region. So really do encourage, wherever businesses are and whatever sectors they're in, we will be doing technology in Bristol. We're definitely not a Bristol-centric tech fund. And as David has said, if it's not right for us, we will try and signpost, help refer in whatever we can to help the businesses find the support we need. Typically, we'll be coming in for those businesses for which debt is not appropriate. They don't have the cash flow, the profitability to support debt. They need equity funding to do whatever it is that they're looking to do, and there will be an underlying growth story to that business. Personally, again, I'm a local guy, born and bred in Bath and living in Wiltshire, so I'm delighted to be focusing on home patch with this fund.
Okay, great. So to kick things off, could maybe back to Dave in terms of the sort of rationale for a regional fund and kind of what the sort of take up's been like so far for SWIF.
Yeah, sure. So why the Southwest? Sort of the rationale for the fund. I guess we as an organisation, the British Business Bank, we carry out a lot of research on a regular basis. And we recognise there is a gap in the market. There are businesses out there that are able to grow, but they aren't able to access the funding that they need to be able to do that. So these funds aim to address that sort of that gap in the market and try and make sure there is funding that is available. And as kind of David alluded to, they may be sort of very successful businesses, but they just don't fit the profile for mainstream high street lenders. And I guess this is where these funds sort of really step into hopefully being able to sort of fill that gap and ultimately just help those businesses to thrive and to grow. And equally, sort of on the equity side, sort of the research that we've carried out, it recognises that the Southwest is very much underweight in terms of the amount of equity investment. It's traditionally very sort of London centric, and you can almost draw on a map and it kind of just ebbs up to Birmingham and sort of engulfs a bit of Manchester as well. But if you can kind of draw a couple of rings from a map, sort of radiating out from London, and they generally sort of head to those other areas. So again, it's trying to just make sure that the Southwest is receiving its fair share of equity investments.
Okay, great. If in terms of sort of live applicants or funding that's been granted so far, could anyone provide some examples of sort of success stories, or what industries, typical businesses that have had funding, and kind of what those rates are? I know David, you gave an example earlier in terms of the ones that blame, but other I suppose talking about industries and businesses, the type of businesses that you've helped so far.
Yeah, sure. In terms of sort of pipeline of transactions at the moment, it's across a real variety of sectors actually, which is brilliant. And what's also great is it's across the whole of the north of the Southwest, if you like, because we are really keen just to make sure that we reach, those parts of the north southwest, if you like, that maybe even more underrepresented in terms of funding. So sort of transactions that we're working on and very advanced on at this point, we have a hospitality business, which is based in North Gloucestershire. We're working on a retail clothing brand, actually, very advanced with that one, which is also based in Gloucestershire. We have a software consultancy firm we're working with in Bristol. We have a restaurant business also that we're working on in Bath. So in terms of the variety, it's interesting because when sometimes I'm a corporate banker by background actually, and when you look at some of these sectors and you look at the general news, if you like, around retail and hospitality, and you hear a lot of information about how challenged they actually are, and I think that's in some cases I'm sure that is absolutely factually correct, but I also think there are some significantly profitable and sort of businesses with huge growth opportunity that may dispel that rumor or some of that fact, because certainly those businesses that we're working with may be largely due to the actual team of people, the founders, the staff, and the position they hold in the marketplace is leading them to be very, very successful. And what I think has been really interesting is as I mentioned, the high street banks have been working with us really collaboratively, and we do see ourselves as a real sort of asset to them, because ultimately we're not trying to compete with them. We don't do foreign exchange or deposits or money transmission, so we're not a threat. What we are to a high street bank is a real, good source of potential alternative finance. So it's a very friendly relationship that we have there. So, a relationship director may have a fantastic client in their portfolio that they would love to support in one of these challenge sectors, but they can't for whatever reason. So we're encouraging them just to pick up the phone to us to have that initial conversation to see what we can do. So whilst they might seem challenge sectors, there are absolutely winners in those sectors. And it's up to us to make sure that we work with them, analyse and pick those really successful ones that, need the funding and can achieve the growth faster with our funding than maybe they would be able to do otherwise. So I hope that's of use. Luke, I don't know what you think and what you're seeing at the moment.
Yeah, a little like you said, David, we've seen a real range of sectors, of types of opportunity, and this is in terms of the main few or the best progress that we have in process and indeed have completed. got a travel and leisure business in Bath. That's obviously a key sector for the local area. A food production business in Wiltshire, that's towards the east of the county. A couple of cybersecurity businesses. That's obviously a really important sector for the local region. One in particular I'm thinking of in Bristol, one in Gloucestershire, and we're in process with a essentially Bristol located tech company, along with a manufacturing sort of engineering business out in Portishead, towards the west of the region. So that's not a sort of confected mix of businesses. That does just happen to be the spread of the main ones we've got in process currently. Common themes there. Quite a few of those wouldn't be EIS VCT eligible, so they can't be serviced by those parts of the market. They've outgrown the angel communities. Some have had early stage funding or been in touch there, but they've outgrown those capacities, and they're not debt ready. They can't support a debt proposition. So that's where we're finding the regional fund really can sort of plug the gap. Those companies wouldn't know where to go otherwise. So they've been really nice fits for the business. So yeah, again, just several of those sectors I'll see as key for the local area. But certainly seeing that real range coming through, and also from a size basis, we're seeing everything from pre-revenue through to really established businesses. We've got to make it work for our check range of sort of at the minimum end 250, 300k up to 5 million per company, and probably a sweet spot of 500,000 to around 2.5 million. That we're thinking of that check size, but otherwise a real range in terms of that age and maturity of business as well.
Okay. Luke, could you just touch on the point about pre-revenue for businesses that looking to raise equity?
Yeah, we've had quite a few approaches from pre-revenue businesses, or businesses that are, if not technically pre-revenue, in the very early stages, or maybe they've had some grant funding or early proof of concept, but they're not into sort of proper commercial revenue yet. We are able to do those. We're not prohibited from doing those. However, there is an obvious lens to risk here. And those businesses, just statistically, they are the highest risk category we can encounter. So what we're doing is appraising all the other factors which could give us the confidence to go ahead, around the management team, the experience there, the sort of proof of concept in the market. What do they have to do to break through to material sales revenue? And what's the cash burn, cash investment going to be required to get there? Can they scale when they get there? In some cases, to be candid, the answer might be they're not ready for institutional investment yet. In some cases, we may be able to do something. And as with other businesses, as with other opportunities, that may be co-investing as part of a wider group, although we can sole invest ourselves. So in short, we can do those early stage companies, but we do have to be mindful of risk, and we'll be doing everything we can to assess the risk via these other means, the team, the market traction, and so on. Okay,
that's great. Yeah, loads of questions coming to my mind, but obviously, if anyone does have any questions, feel free to please add them to the message board, and we'll address them as they come in. Regarding as you've got businesses across the region, and obviously as these funds are quite region specific, presumably you've had inquiries through from businesses which may be looking to relocate to the area or not quite within the area. Could you kind of cover off that for me, please?
Yeah, I'm happy to cover that. Ultimately, this is a fund for the Southwest. So what we're looking at, and probably one of the acid tests, is to look at, okay, well, if we support, what is the benefit to the Southwest economy? Clearly, as Dave has said, there are other funds, similar funds with the same structure as SWIF, sort of across the rest of the UK. So funnily enough, I actually pointed a business to another fund actually literally this week, where actually I think they just sort of seen SWIF and thought, right, okay, we'll have a look at that, but they're not based and they don't have any trading here either. So, but there is another fund that can support them with that. So, we'll definitely direct if it's not a benefit to the Southwest. What we're looking at, say, is the acid test of what benefit is it going to bring to the Southwest economy. So either they need to be based here, or fundamentally do quite a bit of their business here. So that's really the story that we would look for. I would say and not just because they're on the call, but actually our relationship with the British Business Bank is fantastic. So, you know, if there is something that we think, oh, do you know what, this is a little bit marginal, not quite sure, then we have a very sensible conversation between us to go, right, okay, do we think this works? If it works, fantastic, we'll take it forward. If it may not, then right, can we find another home for it? So I hope that helps.
No, yeah, definitely.
And just to add on that, Aaron, we've certainly seen situations where, for example, companies are concerned that their registered office is in London or that they've done other things elsewhere. That's okay. That's absolutely fine. You know, we try and look through that, and as David had just said, you know, assess that benefit to the region. I think you can tend, hopefully, to sniff out the ones who are sort of, you know, it's all a bit too flimsy. They'll take a single desk, and you know, that's it. You know, that we're not looking for. But these features where things, you know, there's a registered office or there's some operations or the dev team is virtual or all that sort of thing, that we can look through.
Yeah, that makes sense. So yeah, quite a material presence within the region is kind of what you're looking for. Yeah, that makes a lot of sense. When businesses are looking to apply, obviously both you, Luke and David have sort of spoken about the application process and some of the information that needed to be provided. How in depth does an applicant need to go with their financials, and kind of how long would that process typically take?
Yeah, if you're happy, I'll kick off on that one. So initially, we have a very simple inquiry form. Takes a minute to complete, and that gives a little bit about the company, you know, what it does, how much it's looking for, and then how they want to be contacted. So that's our starting point. Once we get that, we'll then look at the company based on the public information that's available. You know, look at the last couple of years' financials from Companies House, get a little bit of a feel for the company before then asking for a Teams call. The Teams call will typically take about half an hour, and we do that with every single business that applies. That's really important to us to do that. If it's a transaction we're looking to take forward, then yeah, definitely we look for more in-depth financial information. So the way that we're tending to find it works best is the last sort of couple of years of finalised year-end accounts, latest management information, preferably profit and loss, balance sheet and cash flow integrated if possible. That's the dream. Doesn't always happen that way, and we'll work with whatever they've got. And then obviously what we'd love to have is a little bit of visibility about forecasts. Again, preferably integrated forecasts, but we know not everybody has it in that sort of style. So, you know, we will handhold, we will support, and we will work. What we don't want to do is a company to incur cost where it's not necessarily required. So probably a good example is actually the first transaction that we did. They didn't really have a management account infrastructure in place, actually. So when we asked for that information, it wasn't readily available. Instinctively, we knew that it was a company we wanted to support, which was fantastic. But actually, we then did have to ask for some more granular information that they maybe were producing. Now, we didn't ask for that lightly. We would only ever ask for what we need. But actually what it meant was they needed to get some external support to provide that. But that has been a real benefit to them because they are divisionalized. And one of the things they didn't have a real handle on was what elements of their businesses were profitable, what elements may not have been profitable. And by going through a process of getting a proper MI, management information structure in place, and putting some proper forecasts in place has given them actually some really good direction on areas of their business that they need to be focused on, either to improve margins or to take forward future growth. So as I say, typically that's the sort of the level of information we would go for. Actually, most companies that we've spoken to have got that. So I would say probably 80% of the companies that we've got have actually had that sort of information readily available. And actually it's been of a decent standard. The application form itself is very straightforward. We would only ask for an application form to be completed once we have a feel that there's a positive opportunity to take forward with them. because it does mean we undertake credit checks and that type of thing, and they leave a footprint. So, if it's something out and out we don't think we can do, then we wouldn't ask them to go through that process. Other than that, there are 3 of us in the team here at FW Capital in the Southwest. So a couple of us would tend to be involved in each transaction, so the business would know exactly who they're talking to, and we will just support them every step of the way to make it as straightforward as we possibly can for them. And so that approach seems to be working really, really well. We've had some great feedback on that. So that's the debt side, how we operate. Luke, I don't know on your side.
Yeah, we operate in a very similar manner, and very much, as you say, David, if a company has it already, that's fantastic. Integrated 3-statement models, amazing. If they don't, we can work with that. We can help them get along the way. And it really is about that business understanding point. It's not about trying to finesse what last year's account should have said. It's about, have we really understood what's going on with the business? And as you play through, and certainly with the equity investments, we say 99.9% of the businesses won't do their plan, but it's a mechanism we can talk about. What happens if sales are faster, sales are slower, we uplift this, the investment in the overhead, all of those dynamics really come out when you're having to put something down on paper and play it through. So that's what we're trying to achieve. And exactly like David, we've got a team of us here based in Bristol office today, and it's us working through it with the companies. It's not a sort of computer says no type analysis dynamic. It's we'll be sitting down with the companies and working through whatever they've got. By the time we come to the end of the investment process, there's probably a financial model and a set of forecasts that looks vaguely similar to a lot of others in terms of form and level of detail. But what companies come to us with, they might have hugely different starting points, and we can help them. We can help them through that process.
So that sounds good. That kind of echoes a lot of the information we tend to see from clients, and the freeway forecast is always the hardest one for people to understand and also to get right, definitely. But in terms of decent management accounts, hopefully that's what most people should be coming to from the start. What about personal guarantees on some of the loans as well?
Yep, because we don't look at freehold security, the type of security that we would tend to look for is a mortgage debenture, which is sort of pretty typical for a lender to take from a company. Just on that point, we can co-invest alongside other funders. So, for example, a high street bank may be lending to a business already, may have a mortgage debenture in place. We're happy to sit behind that in a subordinated position. So, as I said, security is just not as not the be all and end all for us. We would tend to take a personal guarantee. The level of that would absolutely be discussed with the people behind the business. Can it impact pricing positively? Actually, if there's a personal guarantee in place. But the level would really be dictated by what sort of a level of investment the shareholders may actually already have in the business. Certainly for the first transaction we've done, the personal guarantees are actually at quite a nominal level, quite a low level. Just really a little bit of commitment from the directors there. But in that case, they have sort of pretty strong shareholder loans in place already, so we didn't feel the need to have high personal guarantees. So went at a very low level, which the directors were actually very happy to provide. We're very upfront about it. There are cases where I've had conversations where the first comment is, "We're not giving personal guarantees." And that's sort of the starting point, if you like, which is always quite an interesting one. And for us, clearly each case is going to be looked at its own merits. The majority of our cases would have a personal guarantee behind it. We would explain the rationale for that, and it's not necessarily the recourse to the assets as such. It's more that we tend to find that directors are more cooperative. If a business gets into a little bit of difficulty, if there's an element of a personal guarantee in place, and the directors will tend to be a little bit more cooperative, a bit more hands-on. That's a really general point, and I always feel a little bit difficult in saying that, but I guess the facts have been proved in that case that tends to be the end result, tends to be a better result. I hate talking about doomsday scenarios because that's when it all comes into play, isn't it? Really, but it's best to be open and honest about that at the start of the discussion, which we would always be.
I think, I think you're absolutely right. I think clients always seem nervous when they're asked for a personal guarantee and what it could potentially mean. But ultimately, if they're trying to attract investment into their business, they've got to believe in what they're trying to do. And I suppose they're in control of what the business is going to do, and they need to show that they're prepared to sort of to back what they're asking for, really, isn't it? So it's only reasonable, really. But yeah, it's important that people sort of realise that is required. We do have a question actually for Luke, I think, on behalf of Maven, in terms of does Maven work with Innovate UK for grants, and would you work alongside other funders, I suppose, with that when raising equity?
Yeah, two elements to that. I mean, certainly, yes, we do work alongside Innovate UK, or and if not, in some case they have funding dynamics and we have good relationships there and they refer things in. But more generally, a very large, I couldn't tell you off the top of my head, but it's a very large proportion of the portfolio have in some way engaged with Innovate before, had grant money or had funding. I could think of several of the portfolio currently that have been beneficiaries of Innovate money or participants in schemes. So absolutely, we're happy to work alongside Innovate or with companies that have had involvement with Innovate, and more generally happy to work alongside other funders. Indeed, in some situations, that's really helpful to us to have that, that conviction from someone else alongside, and indeed depth of pocket. I'd say the one thing that we don't seek to do a lot of is to be a very small part of very large fundraisers that are syndicated amongst lots of funders. I think that's not really the purpose of why we're here. That may be the right solution for some companies, and that's great, but that's not what we're seeking to do. Typically, if we're working with other parties, it will be a small, 1, 2 others. I'm talking institutional funders. If there are angels or a tail of friends and family investors, maybe there'll be more on the cap table. But in terms of sort of meaningful co-investment, it'll typically be a small number and will be a very significant part of that. But very, very happy. Long-winded way of saying yes, very happy to do that, Aaron. That's fine.
No, that's great. So there's probably a few people There's probably a few people on the call who might be thinking of ideas or thinking of things in which they could that they might be looking to get investment into their business. Could you provide some typical examples of? Obviously, you've given a background around the businesses that you have funded, but maybe around some of the things that they've actually used the money for. So have they been looking to buy assets, acquire, open new premises? What have they actually been using the money to actually do?
It's a real mix. So we've had one which is all around bringing on new staff, expanding the team, because the level of demand for what they do was very, very high, and they just didn't have enough people to fulfill it. So just needed to bring on a new team, and they had plans, and they probably could have done it over maybe a 3-year period based on their current trading performance. But the benefit of the SWIF funding was that they could do it like now. So they had this real opportunity to take. And they've probably been able to bring it forward maybe 2 years than they would have done if they'd just done it organically. And that's a real benefit to this fund, right? There's no question about that. It just means these businesses can take it forward faster. We've got a business just looking to open a new restaurant. So capital equipment, staff, getting that up and running. We've got a hospitality business that's actually developing extra rooms. So it sort of falls into a little bit of real estate, but it's for their own business. So that will attract more staff, more guests, more tourism into the location. So we get a real benefit to the Southwest economy. We've got one actually, which is a really interesting one that we've had some initial discussions with. We're seeing next week actually, and the company's just been acquired. So we're not involved in the actual funding of the acquisition. That's been done privately, but the acquirers have actually seen this huge opportunity that hasn't been taken by the previous management team. And that again is capital, that's staff. They're looking to do some overseas contracts. So a huge range sort of within that. we have a business that I'm smiling because it's one I'm really desperately wanting to support, and we're just waiting for all their management information to come through at the moment. They've promised it today, and I've been looking at my email seeing has it come in yet. It's just an amazing story of two like young entrepreneurs in their like mid-20s, I guess now. It's one of these stories you hear about. They were trading at school like sweets in the playground, and then they went on to do various other things, and they've got such an amazing growth opportunity. They've already grown substantially, but they're looking to take on new premises, looking to take more stock to fulfill what they need. They need a new IT infrastructure to make it all seamless. They've got so many different opportunities. And for that one, I think it will be trying to refine, okay, well, what do they actually need? How do we structure this in a way that actually is going to make this work for them, to enable them to take this growth forward, but in a measured way? They're very measured people, right? I've got no concerns over the management team. They've done an amazing job. But that's a really exciting one, but just shows the breadth of what this fund actually can fund. There are so many different elements to it. So sorry, I just went a bit excited then because I love this particular business. It's right near my house as well. And I think they're cracking entrepreneurs. And that is the beauty of this job, actually. You get to meet some amazing businesses, and starting to talk to them at an early stage, you almost become sort of a friendly advisor to them. Because they start phoning and saying, "Oh, I'm looking at doing this. What do you reckon?" type of thing, and I love that. That's a brilliant part of our role, actually.
Yeah, that's the good bit.
David and I live quite close to each other. I'm trying to figure out what business he's talking about now. Start looking at maps. I can certainly give you two examples of things, sort of two categories that have been coming up a lot. One is around manufacturing businesses and FMCG, particularly food and beverage. There's been definitely a sort of a cohort who are looking for that physical expansion. And it's investment in working capital, it's site expansion or site move. I've got offers out on one at the moment, which it's a great a food and beverage business, which is outgrowing its premises. It costs a lot to move up, do all the working capital adjustments to keep supply going whilst they affect the move and that sort of thing. And they'll increase headcount and so on. So there's definitely that sort of physical expansion bit. The other bit, particularly when we're coming into technology businesses or services businesses, there's a very common story around, again, expansion, but it's typically in headcount, typically around sales and marketing. Both in terms of outward spend, PPC or whatever it might be, but also definitely headcount, and also internal functions. Often people or companies are upskilling their internal functions, perhaps appointing a finance director they've outsourced before. But those sorts of things, and growing up as an organisation and wanting help to do it. So I think in general, those are probably the two sort of types of case study that we see more than any other kind, and in terms of use of funds. Not to say other things wouldn't be entertained, but that's they're I can think of several. Yeah, as I say, we're working through, and those are very common stories for us.
That's really helpful. That's really helpful. We've had a question from Andrew Steele, actually. It's aimed at Luke, but it might be so maybe Luke, if you could cover it first. But I think it's also relevant for Dave as well, in terms of the actual fund itself for British Business Bank. I don't know if you can see the question, Luke, but
absolutely.
It's around the type that they've asked. What type of returns criteria that the equity might ask for, and any exit timeframes, and I guess for Dave, it's then around the actual fund itself, and kind of how what the future looks like for it, for SWIF, I guess.
Yeah. Certainly from our point of view, exit timeframes. It's a 10-year fund, and we're about 9.5 years to go. But we will assume for a given investment, unless there's a good reason to assume something else, we'll be modelling things over a typical 3, 4, 5 year horizon. That 4 to 5 year horizon for an equity investment would be the norm, and that's what we'll be modelling. As I say, absent any other consideration, and that also doesn't mean we're necessarily tied into that. If a business, as frequently happens with the portfolio, some businesses will get a tap on the shoulder part way in, maybe that's attractive. Some businesses might take a bit longer. I mean, portfolio plans went out the window for all of us when COVID hit. So these things are flexible, but we'll assume 4-ish years. In terms of returns criteria, then our target, again, bit flexible. There's an element of risk reward going on, and the food and beverage business I mentioned that's moving site isn't going to explosively grow to the same degree as some of the tech business we're working with. Possibly it's a little lower on the risk scale as well, so we'll be taking that into account. But as a if I can generalize though, as a fund, if I can see a 2 to 3 times return on average investments, that's good. We'll be looking at a downside sensitivity where if we can credibly be getting our money back, be at 1 point something times, and then on upside, if a credible set of positive circumstances come through, be into that 3 to 5 times category. You'll appreciate I'm generalizing hugely. Then that's a good triangulation of terms from an investment committee perspective. Obviously, some things will do better, and we accept there'll be a range within that. But if we can average out to that sort of profile, then that's okay from an equity point of view. I'm sure, David, this is where you and I will differ a little bit in terms of the returns profiles.
So I'll just take the point then about the wider fund. I guess following on from that, and I think it's important to almost step back a little bit here and look at the sort of the predecessor to the Southwest Investment Fund, which was the Northern Powerhouse Midlands Engine Fund. Those funds were set up, and they were sort of almost a test case for SWIF, and that was kind of the springboard we used to get this funding from government. So in total, that was 700 million funding package, of which UK government in effect contributes around the £200 million mark. So we've been able to go back and say, look, these funds were great. They've delivered these sort of commercial outputs, strong returns, as well as a number of jobs created and a whole raft of sort of economic benefits. And off the back of that is how we got the £1.6 billion. So I suppose we then sort of cast that lens forward and we look at SWIF. We've pointed the funds that we've sort of talked through from David and Luke representing today, and we drive to get good, strong commercial returns for the fund within the parameters that have been set out. And ultimately, the aim is that these funds will almost become self-filling, so that without wanting to, there's only 50 minutes left, so I'm not going to go into government accounting for how it all actually works, because there just isn't enough time for that. But we basically want these funds to deliver a strong commercial success, so we can stand there and say, look, there's a real need for these funds to help support businesses in the Southwest. And we can sort of point to a whole load of businesses that have been supported and sort of economic output that has been driven and growth that has occurred as a result of these fund businesses that otherwise wouldn't have been funded to grow. And then off the back of that, I guess the sort of the crystal ball piece is that we'd look, and as these funds sort of start to reach the end of their life, either look to potentially request more money to extend them or come up with SWIFT 2. So that's kind of we've got to be looking reasonably ahead in terms of the timescales for doing that, but that is ultimately sort of from the bank's perspective. We want these funds to be a commercial success, and for them to be a commercial success, they then deliver all the economic outputs that help businesses grow along the way.
Okay, no, that's great. Is that the main sort of would that be the main kind of register of success for the bank? Is there other parameters that you're looking at?
Yeah, so so in terms of sort of the parameters that we're looking at to measure success, we will carry out analysis on the sort of economic evaluations on these funds, sort of a number of sort of inflection points throughout the life of the fund. Obviously, the commerciality is the one that's very easy to measure because there are pound notes on the table and we can count them. We will then, through the evaluation process, we will sort of form a view about what other sort of outputs have been driven. So in terms of things like whether it's jobs created, whether it's sort of increasing exports, there's a whole raft of sort of measures that we'll look at. And then sort of intertwined into that, the bank has got ESG objectives as well. And we'll look to how the fund has helped support those. I guess it's important to note that it's not an ESG focused fund, so it's not necessarily looking for those objectives as a sort of an investment criteria. And I guess the other thing as well is we look to ensure that there's been the spread across the entirety of the region. So the fund managers, they've got targets that we've set them to make sure that the funding isn't all going out, for instance, in Bristol. We want to see the entirety of businesses across the entirety of the patch supported. And sort of the targets our fund managers got will hopefully help support drive that deployment and to make sure it's getting into the right areas.
I think there's something there, if I can, Aaron, just to touch on, is around the ESG side, and I think we've seen a lot of opportunities. It's another sector that's a strength of the region. We haven't mentioned on this call yet today, but we've seen a lot of opportunities around sort of circular economy and businesses that in some way have a lens to ESG outcomes. As David said, this isn't an explicitly ESG or impact fund, but obviously we are thinking about these things, and just commercially there are great opportunities going on. But also we see, in particular with earlier stage companies, people saying, sort of wanting to knowing these issues are important, but not really knowing how to address them, or not really knowing what ESG means for their businesses. And it's another way, as a fund manager and with a portfolio of businesses, trying to help them with that best practice and see, how will ESG considerations affect them. Might that be around anything from, diversity within their employee base through to carbon policies or whatever it might be. That's one of the areas where I think companies do and can look to us to sort of help as part of our role as we work with them through the investment phase and then post investment as well. But it is a real strength of the local area, I think. Absolutely,
ESG is becoming more and more relevant. It's featuring into kind of all sorts of industries and businesses, and most businesses have to have an ESG policy, or looking at what suppliers they use and their supply chain. We're seeing it as well in terms of some of our audit tenders as a firm, that clients want to be, larger companies want to be audited by companies with ESG, positive ESG credentials. So it's definitely something that's I can see that it's needed for to be considered in any application. Does anyone have anything else that they'd like to add? I mean, most of the sort of topics I wanted to cover, I think we've sort of spoken about.
Yeah, the only thing I was going to mention is about Southwest Investment Group, actually. So, not represented on the call this afternoon, but do play a pivotal role in delivery of the Southwest Investment Fund. So just to recap, they will do debt up to 100,000 under Southwest Investment Fund. They also administer the startup loan scheme, and I have to say I've been really impressed with them. As a sort of corporate banker by background, I wasn't really ever quite aware of what they did. They are across the whole of the Southwest, and they are really supporting some fantastic earlier stage businesses to really achieve ambition. So I just really wanted to give them a shout out. Sometimes I've actually sort of put some referrals into SWIG, maybe where they are a little bit earlier stage, maybe where they don't have a sort of a track record of profitability, as sort of turning a corner, or indeed maybe they don't want as much as 100,000, which is what we do. And SWIG's sort of response and attitude to that has been fantastic. So anybody on the call who doesn't know about SWIG, I'm not on their payroll, by the way, but I should be maybe. But I've been mightily impressed with how they've dealt with some of these smaller, earlier stage businesses. So definitely advocate you having a look at that. Indeed, there's a southwestinvestmentfund.co.uk website. So that gives a real good pointer actually as to all our contact points, who you can talk to about what. But I know Luke and I, very happy to have any conversations, and we will make sure we point you in the right direction at any stage.
Yeah. Absolutely, and I'd echo that, and I'd just add, people can work with more than one of us in the course of their life cycle. In fact, in a way, that would be quite a nice thing to see businesses cycle through and maybe start with a smaller loan from SWIG and then progress and outgrow that and do something else, and that's absolutely fine. And on that theme, something I should have said earlier with the early stage companies is that we can follow on. In fact, we're very keen to follow on. So again, companies sometimes are saying, is now the right time, or a good solution all around can sometimes be to take an amount, what they need, and we're very happy to back businesses that then continue to grow, and there might be further working capital needs or what have you, and it manages the dilution for the company, our risk, but allows us to support the businesses as they grow. So it's just in that theme really of flexibility and sort of there's an awful lot we can do, but that's another angle that we hadn't yet mentioned on the call. This is not a one-time opportunity, whether that's working with one of us fund managers or indeed money from a particular fund manager. It can be repeated along the way.
Very good point. Very good point. And yeah, that kind of echoes the main aim of the fund, doesn't it? Really, it's all about growth. So if you start with a small initial gain and then recycle that into equity, then that's kind of the aim of the game, really.
Absolutely, and that, I think, to the credit how it's been designed, provided we can demonstrate the local link, enough regional presence, enough regional benefit. We want to be supporting good growing businesses.
Case in
that
point,
sounds terribly cheesy, doesn't it? But sorry.
No,
sorry,
not at all. I think even this week, Luke, we've had one of those situations this week actually where a particular company has approached me, and actually I can do some debt, which is great. We put some terms out to them, but their growth aspiration is very significant, and their opportunity, I think, for growth is very significant. So, with their blessing, I've said, look, are you happy that I make an introduction to Luke at Maven, because equity isn't needed for them today, but actually, having a discussion today about future equity, I think is very, very beneficial for them, because they may well need it over the next sort of 12 to 24 months. So I think that's where the cooperation between the three fund managers in the north of the southwest is really strong. And we can just make sure we're looking ahead. Okay, what might this company need in the future? What's the best type of way in which we can take that forward? So I think that's sort of a good live example, if you like, of how that can work.
Yeah, totally agree.
Dave, any parting thoughts? Anything you want to cover off on behalf of the British Business Bank?
Yeah, sure. I mean, I guess just to reiterate, I guess I'd encourage anybody that's got any sort of inclination they may be sort of interested in funding, to come through the website, so southwestinvestmentfund.co.uk. And if my comms colleague was here, she'll be kicking me in the ribs to plug the LinkedIn feed as well. We will be hosting sort of a number of events ourselves as well across the southwest over the course of the year, and they're generally a great opportunity to meet the likes of sort of Luke, David, and the other fund managers that we've got in SWIF Finance in the smaller space, but also come and meet them. And quite often those conversations, where I'd be told that sort of take place over a coffee at an event, are quite often highly fruitful, and they can sort of help sort of drive in any sort of specific questions and sort of resolve any issues, and hopefully ultimately get some funding to work and help some businesses to grow out there. So I guess sort of get involved is almost the call to action, let's say, to everyone. But yeah,
absolutely, and never too early to start a conversation. I think it's the key thing to take away. Okay, great. Well, thank you very much for your time, and thank you very much for everyone that's joined in and listened to this conversation. So we'll end it there, and thank you very much. Have a good afternoon.